Hi friends, welcome to the first episode of Knowledge Capsule by BNI Prudent. And today's topic is financial asset allocation. We have with here Mr. Jaydip Mehta, Hi sir, founding member of BNI Prudent, from Sunidhi, a stockbroking firm, here to talk about financial asset allocation. Before we begin, sir, I would like to ask you, how long have you been in this field?
So we started Sunidhi stock market operations in Calcutta in 2002. The works and everything. Sunidhi is a national level stockbroking firm. So we are doing everything a stockbroking firm does.
So you've been in this field for the last 22 years.
Correct.
Okay, great. So begin with, let me ask you my first question, sir. When should one start his investment journey?
The most important question, when should one start investing? First and foremost, let's understand, are you in a position to invest? When I say that, I mean, how much debt do you have? If you are having loans, if you are having constant pressure of EMIs, how are you going to invest? So my first advice to everybody would be to first clear off all their loans, clear off all the EMIs. So somebody might come and say, okay, I have a loan of the housing loan and I still want to invest. Fine. Housing loan is different. But apart from a housing loan, everything else can be in a very depreciating mode. I'll give you another example of a car.
Okay.
People buy a car for 20 lakh rupees and then they keep on paying EMIs for it. Now, a 20 lakh car is not an investment or an asset class. Why so? Because after 5 years, what is the value of that car?
Close to nothing, I guess.
And I'm not talking of the maintenance cost, I'm not talking of the
that's all
petrol cost,
plus.
that is plus.
So, yes.
Even if you're paying the interest, that interest component also gets added to the 20 lakhs.
Of course.
So after 5 years, your car will be say 3-4 lakhs.
Yeah.
Now, if you are changing your cars every 5 years, after 20 years, how many cars would you have bought and sold? 4 cars.
4 cars.
How much money?
80 lakhs.
And how much left? After 20 years, what will you show?
Close to nothing, sir. 2 lakhs, 3 lakhs.
Are you understanding?
Yeah.
So you are basically thinking that you're investing in an asset, but it's not an asset. It's a depreciating expense. So understand the difference between an asset, which is growing on its own, and an asset, which is depreciating.
Okay.
So first and foremost, clear your debt. Then you come to the investment.
One follow-up question I have is, personal debt is different from a corporate debt, right?
Correct. That is business. That is, you are doing business loans for growing your business. You understand the business mechanics. But as an investment, as an individual, you cannot be having loans at an individual level and then talk about investment at the same time.
Okay, great.
Now, at the investment point, let's understand. I'll give you some pure simple maths. I gave you the depreciating side of the car. Let me give you another example of an investment asset class. If, hypothetically, if you invest 1 lakh rupees at the rate of 8% in any financial product, be it a fixed deposit, mutual fund, share, anything. I'm not talking of any asset class. I'm talking of an asset that grows at 8% per annum. If you invest 1 lakh rupees for 8 years, that corpus at the end of 8 years will become 1 crore 35 lakhs. Out of which 96 lakhs is yours. How 96 lakhs is yours? 8 into 12. 8 years you have invested. 12 lakh rupees per year means 96 lakhs is yours. The 96 lakhs has grown to 1 crore 35 lakhs. Now, after 8 years, if that money keeps on growing at 8% per annum, for your life, you can withdraw 90,000 rupees from that corpus and that corpus remains intact. So you are getting a pension kind of amount of 90,000 rupees every month after 8 years for a lifetime. And this 1 crore 35 lakh rupees stays. Now, if another small twist, if that 8% becomes 10%, the corpus becomes 1 crore 45 lakhs. And the monthly income will become 1,22,000.
1 lakh.
So are you
That's a big difference, yeah.
It's a very simple math. Everybody understands this. But then also people will invest in a car and not invest in a product which will grow on its own. That's the difference between an appreciating asset and a depreciating asset.
So what we understand is lovers of fancy cars do not invest in a car.
Well, people who buy cars, they have a different mindset. They are very rich, ultra rich clients where they are earning that kind of income. Their income is in the level of those that it does not matter if they are earning 10 crore rupees, they spend a crore on a car. How does it matter? It's just a 10% of the income.
Yeah. Okay. Moving on, sir. Moving on to the next question. How much should one invest in today's times, or rather, what percentage of one's savings should go into an investment?
Well, for that, first and foremost, you need to understand what are the different asset classes. Let's understand what are the asset classes that are there for you to invest in. I would broadly categorize the asset class into three categories. 33% is what we should be investing in.
Okay.
Now, first asset class is real estate. You like it or not, as an Indian, your biggest asset percentage will be always a property.
Property.
Your
Yes.
office and your home.
Yeah.
This is your biggest investment. You cannot stop it because that's a mindset. And it's not an investment done with maths. It's an investment done with an emotion.
Security and emotions.
Security is an emotion. It's the
Yeah.
same thing. Because if you do not own a house, you do not want to be unstable in life.
Right.
So property will become almost 35-40% at any given point of time.
That's the primary asset.
That's the primary asset class. Next, you should invest in equity. Now, equity you can invest in directly also, or you can invest through a mutual fund.
Mutual.
Both are equity. Mutual fund is not something separate or a different asset class. It's an equity-based investment I'm talking about. I'm not talking of debt funds out here. I'm talking of pure equity-based. So that should be that's another asset class. Third asset class, debt. Debt can be the form of actual debt that you give to your next door neighbor or your relative. Don't do it. Debt can be debt can be liquid funds. Debt can be long-term funds. I would suggest not to do for long-term funds. But liquid funds, yes, very important. They give you anything between 6 to 8% depending on the market condition. Time to time. But 6% is a short. Debt can be fixed deposit. It's also counted under. You require a fixed deposit irrespective of what your age is. You might be 30 years of age, 25 years. You require a fixed deposit. Why? Because that money is there for a rainy day. You do not know what prices. Your job is there, not there. Certain crisis in business, that fixed deposit.
Immediate liquidation.
Immediate liquidation. So fixed deposits, liquid funds are the kind of debts I'm talking about. Bonds is also, now the retail has started investing in bonds. There are government secured bonds, GSEC bonds, which are called 7.2% interest, as good as a fixed deposit. But security-wise, better than a fixed deposit. Why? Because fixed deposit, must be covered, is guaranteed by only 5 lakh. Suppose if you have 1 crore rupees fixed deposit, only 5 lakhs is guaranteed by the Reserve Bank of India.
Okay.
Now, if you put 1 crore in a GSEC bond, it is by the government of India. 1 crore is secured.
Entire amount
is secured. So GSEC bonds are better than a fixed deposit. So that is also a debt, I would call. That is third. Fourth is, I would say, tax saving products. Your PPF, your insurance. So insurance is there for a reason, but you can take insurance as an investment also. Assume you will not die. Your insurance policies should be timed in such a way that you should get money back at the age of 60-65. It accumulates and it's a forced saving. PPF, forced saving. NSC, forced saving. This money is actually getting used for tax. Instead of that, you are paying here and they keep on accumulating.
That's smart tax planning.
PPF, people say, you're not beating the inflation also. People forget. You don't have to beat inflation because it is part of the 8th wonder of the world. What is the 8th wonder of the world? Compounding. Compounding is the 8th wonder of the world. So if 1 lakh becomes 1,08,000 next year, 1,08,000 pe again you get 8%.
Yes.
That accumulates into a big amount after 15 years. I just now explained to you that 1 lakh
8% and 10%.
What can happen?
Yeah.
So money on the interest is also important. So that's another thing. Another asset class, bullion. By bullion, I mean gold and silver.
Gold and silver.
I am not talking about jewelry. Jewelry is an expense. If you buy jewelry for your wife and you think that is an investment, sorry boss. कहीं गलत फहमी है. आपकी हिम्मत है तो जूलरी निकाल के दिखा दो.
नहीं, impossible.
Impossible है. लेकिन अगर आप गोल्ड बार और सिल्वर बार में इन्वेस्ट कर रहे हो, ऑफिशियली वो एक पॉइंट के बाद खाली अप्रिसिएशन होगा तो आप बेचोगे भी नहीं बेचोगे. So for example, I have been buying silver at the range of 20,000 rupees. Today the price is 80,000.
80,000.
Okay, I have been starting 10 years back. Fine, 15 years back around that time was the.
So when you say invest in gold and silver, you mean invest in gold and silver bonds?
Bonds or physical.
Physical as well.
Gold bonds is even more better. It's guaranteed by government of India and it gives you 2.5% interest on the market value at which you were issued at.
So double benefit.
So 17 and for 7 years it will give you 2.5%. That means 17.5% is sure.
Sure.
Plus the appreciation of gold. So that is even better. So those are the asset class. One more asset class that you need to also look at is foreign investment. Why foreign investment? Because our kids are going to go abroad and study. We don't know. They might not. But if they do, a certain amount of investment, if done in a foreign asset class, like mutual funds outside, even if you just do simple mutual funds in the US, or there are options in the Indian stock market, Indian mutual fund scenario, where they invest in the China fund or a US fund or a European fund. They have those kind of mutual funds available now there with us. Where if you're investing, you are basically trying to protect your dollar appreciation against. So like 15 years back, when I started investing for my daughter, the dollar was 50 rupees a dollar.
50 rupees. Yeah.
It is 83 rupees a dollar. Even if I don't do anything, it has gone from 50 to 83. Suppose I had invested 10,000 rupees.
So that's your savings.
That's your savings.
Automatically, without having to do anything.
This money will be required somewhere down the line. And if you're putting in some amount, majority 90-95% is in India. But 5-7%, because now it is no more a thing like India is separate, that is separate. No, there's one world. You have to look at global finances. So these are the different asset classes that I would suggest to invest.
Okay.
Basically, go by the rule of 33.
33. Okay.
Now, when I'm saying 33, 30 to 35% in property, 30 to 35% in equity and mutual fund, and 30 to 35% in the rest of the asset class. Rest of the asset class is what? Insurance and PPF, tax saving products, bonds, bullion,
forex, debt,
and foreign investment.
Okay.
But in that, I would suggest have 15% in debt. Means debt, fixed deposit, bonds, anything.
For emergencies.
For emergency. That should be 15% of your total 100 rupees. So if I'm saying 30-35% over there, 30-35% in equity and property each, I'm saying 15% minimum should be in your debt.
Yeah.
And the rest 5% depending on your
as per personal interest.
Personal interest.
Yeah.
You can do that.
Okay. That sums up the question very nicely, sir. But sir, एक बात तो बताइए, to make it very simple in layman terms for our viewers. पकड़ लो मैं साल का 1 करोड़ रुपया कमाता हूँ. मैं 1 करोड़ में कितना इन्वेस्ट करूं, कितना सेव करूं, क्या करूं आपके हिसाब से?
So just now that we started with clarity with debt. First and foremost, आपका debt is zero. Because आप debt अगर 15% और 18% या 12% में भी ले रहे हो और आप यहाँ सोच रहे हो कुछ एक्स्ट्रा कर लोगे तो नहीं होगा. आप यहाँ 20% कमा लोगे, 20% आप अपने धंधे में कमा सकते हो. इक्विटी में साइकिल्स होते हैं, गोल्ड में साइकिल, प्रॉपर्टी में साइकिल होता है. अगर वो 3 साल मान लो कुछ भी ग्रो नहीं किया तो आप फंस जाओगे. So you should not have debt. Now you have surplus fund. In that, I would never advise to invest in anything in a lump sum.
Okay.
Always do a systematic investment plan. Now people have this misconception that SIP means mutual fund. SIP means it's a process, systematic investment plan. When I'm saying systematic investment plan, you can do systematic investment planning in equity directly. You can buy 10,000 rupees of one stock every month. For example, मैं आपको रिलायंस लेने का बोलूँगा. आप जाके 2 लाख रुपए का रिलायंस ले लोगे. पहले 20% घट गया तो क्या होगा? आप बोलेंगे घटका अरे भाई रिलायंस है, मैं क्या कर सकता हूँ. बट वही चीज में अगर आपको बोलूंगा कि भाई आज अपने 10,000 का लेते हैं, अगले महीने 10 का लेंगे, अगले महीने 10 का लेंगे, अब आपका माइंडसेट क्या होगा? भैया रिलायंस घाट मेरे को तो और 10,000 का लेना है. So whole approach changes. If the price goes down in an SIP, you will always want the price to go down. Why? Because you want to accumulate assets. But we are looking at 3 to 5 years projection. Be it gold, be it property, be it equity, be it mutual fund, any asset class, you should have minimum 3 to 5 years projection. Now, if you're having a 3 to 5 years projection, systematic investment plan is the best way. Why? Because you don't want to time the market. You don't have to have the brains to time the market. You might not want to listen to any expert. Just time it out. So put your money in a liquid fund. It will grow at 6% minimum. Yes. Balance every month, take out from that, say 10 lakh rupees every month and start investing in the various baskets that we discussed about. So investing in a lump sum way is always the most wrong way to do it. Yes, you can make big money. Yes, you can lose
big money as well. Yes.
People who make big money will come and talk about it. People who lose big money will
never talk about it.
So let's be see if it's your money, boss. Why do you want to unnecessarily play out?
So SFA gives us the benefit to capture the variations or the cycles in any investments.
So even if like gold or bond or silver, you buy 10 grams of gold every month. 1 kg of silver every month.
So it protects us against any ups and downs.
Correct.
And gives us a steady return in the long run.
If 3 to 5 years, everything is going to beat the inflation, right?
Yes.
If you're trying to beat the inflation, why do you want to time it? We are not looking at short-term investment. Anybody who wanted to do short-term is my best of luck, I would say.
That's a very great answer, sir. So for the viewers, if you need any investment ideas, advice, options, you know who to contact. Thanks for watching the first episode of Knowledge Capsule. I hope you all learned a lot from it. Please like and share our video and stay tuned for the next episode.
Thank you, Gaurav.